Hey everybody, it's Dan Lomar, CFP professional with United Wealth Management. Today I've got my business partner Alan Bewley with me. We're going to talk about three important topics that have come up lately. The first one is we've been getting, well, I say we, the pilot group is beginning some text messages from what appears to be either United or Alight, the Benefit Resources Center, asking for different things about checking your on your RHA balance or whatever. And long story short is we see some fraudulent activity in the RHA. So we're going to talk about that a little bit today. I went through some estate planning for myself last year, and I utilized the MetLife legal system plan that we have available to us. And so I'm going to talk briefly about that. And then we're also going to talk about tax returns, Roth conversions, Roth brackets, and some stuff like that. So that's kind of what we're talking about today. Alan, what's up? How you doing?
Allergy season, so if I sound muffled, that's why. Sorry about that.
Yeah, no worries. So, well, let's just jump right into it.
Yeah.
Alan, we have got a few notifications around the system from our clients, from other people we've heard from about these fraudulent activity in the RHA. Some RHAs have actually been, and I say RHA could be active HRA
Yeah.
also. Some of these have been hacked, which is amazing because, right? How does money leave the RHA when it takes us 50 acts of paperwork just to
Correct.
get our own money approved for it?
The answer is that criminals are very good at what they do. What's happened, according to the R&I committee, is that active HRAs, RHAs, people have been getting some of these phishing texts or emails, and they look fairly real on the surface. So here's an example that the MEC put out recently. But if you look real closely at it, if you just read it, it doesn't sound like someone that wrote it whose English is their first language. The other issue, it's United dash ALRLINE, and it's United Airlines, and there's no L there. So there's some kind of blaring things that you should look at. But what has happened is people have clicked on these links and they've actually taken you to a website that looks like YBR, the Alight website. They've entered in credentials, which has given the bad actors those credentials. And those bad actors have used those credentials to basically firestorm hit your account with $700 to $750 claims. And they have it set up just right to where we know of one pilot who lost $40,000 in about a 24-hour period by massive multiple one after another $725 claims, and they're paying them out very quickly. So like Dan said, yeah, I mean, really, we'll submit for something and we get declined and then you submit it again and they accept it because they didn't see some dotted whatever. So but think about email phishing, text phishing. If you get something from that it looks like from the company, from Alight, don't pay any attention to that communication. Go straight to the Alight app or go to the Alight website, the link you know. But look, also the other part of this too, if you're just not sure and want to be really careful, call the Benefit Service Center. Call them. Number is 800-651-1007 and say, hey, I got this message. There's something I need to be doing. And nine times out of 10, they're probably going to say, nope, that was a bad actor. So just be careful. Don't click on any links from anything from that appears to possibly be from the company, from Alight, YBR. But I would just stay away, I guess, from clicking on links in text messages or emails that are unsolicited. Is that
Yeah,
fair enough?
yeah, absolutely. And would you recommend following a PDR if somebody happens, if that
Oh
happens?
yeah, hey look. So yeah, if you do get something that looks fraudulent, take a screenshot of that. Definitely submit a PDR if you're an active pilot. If you're a retiree and you get that, send it to us. We'll PDR it for you.
So, yeah, so the little feedback we've got from the I committee is that they're working on this. They're well aware of it. They know it's happening, but obviously everybody's own due diligence just to stay on top of it and be aware of that stuff. And like Alan said, the bad actors out there are getting more and more sophisticated every day. So, just stay up on that stuff. So,
The last thing I'll say is there's been no definitive answer on now what? My money's been stolen. Now what? Is it insured? And I think the problem may end up being it's going to be tough to try and get reimbursed from the company, from Alight, if you're the one that went on and was susceptible to that phishing operation, whether it was an email or a text. Just be careful. Just don't click any links on any emails or texts that just, let's jump straight into our trusted sources of websites and phone numbers.
very good. All right, cool. All right, we'll move on to the next subject, talking about estate planning. And the reason I want to bring this up here too is I just went through it for myself, and I did utilize the MetLife legal services as to kind of how that is. And if you're not familiar with this is probably the biggest message for the pilot group out there is that if you have a life insurance policy through the MetLife legal services, or excuse me, through MetLife, the GBL policy that we can buy through United, or if it's through an Alpha policy, then you have access to MetLife legal services. And the other way to do it is that during open enrollment is that you can sign up for MetLife legal services and pay like 15 or 20 bucks a month or something like that. And then now you're not just getting estate planning stuff, you're getting all kinds of legal services that you have access to through that additional benefit. And that's what I had did as I had signed up for the legal service. I was paying 15, 20 bucks a month, something like that. And that's how I went through it. So long story short, if you're not familiar with it, so whether you've got the basic level through the GBL policy or whether you've got it through the MetLife legal services, is that you have access to complimentary estate planning, and basic estate planning is what we're talking about. So the biggest thing about it, in my opinion, a lot of times the hardest thing to do about estate planning is, well, who do I work with? Who's my attorney going to be? Well, if you call MetLife Legal Services, give them a group number or just tell me with United, give them your employee number. And what they're going to do is they're going to send you 3 attorneys in your local area that are in what they call their network, right? And so what that allows you to do is work with one of those 3 attorneys that are in the network, and they're going to help you do basic estate planning. So powers of attorney for healthcare, powers of attorney for assets, and set up a will. So that's about as basic as you can get. And all that is complimentary. If you have to do more than that, say setting up a trust and stuff like that, then now that's above and beyond what the scope of what they provide. So, but that's okay. At least this is a great way to get you started down the road. So what I ended up doing is I worked with a local attorney in my area that specializes in estate planning. Now, they were not in the network, but the benefit still reimburses us for up to the equivalent amount as if they were only doing power of attorney for healthcare, assets, and just will preparation. It was ended up being quite a bit more than what they reimbursed you for, but that's okay. They did end up reimbursing me. So I basically submitted a claim just like you do normally. And they did end up reimbursing me for the equivalent of what it would have cost just to do the basic stuff.
So if you use one of the attorneys that's in the network, they will do the will and those power of attorneys complimentary. However, if you have Hyatt legal plans, if you have that benefit and use someone outside the network will reimburse you for what they say the cost of that.
Yeah.
Okay, so if you find them through the Hyatt legal services, though, there's no money exchange at all unless you do those extra documents like a trust or things like that.
Yes. Yep.
Okay.
Exactly. So now, I think they've changed the name over to MetLife Legal Services.
I think you're right. Sorry.
So it used to be called Hyatt Legal Services. So it's all one and the same now. So in case you hear us or somebody else refer to it as Hyatt Legal, I think it is called MetLife Legal Services now. I submitted my paperwork. They have the attorney fill out some documentation that they'll send you. I had them turn it out. And of course, like it's a little bit like getting reimbursed from the RHA.
Yeah.
I submitted it first. They go, oh, no, that's not good enough. So I had to resubmit some stuff like that. But long story short, it took a little while. But they did end up reimbursing me about $850, I think, for the services that I had done. Now mine cost more than that. I was perfectly okay with paying the extra amount with trusts and stuff like that. So that's the big thing to think about right there. So, but other than that, estate planning, a really good acronym. A good way to think of estate planning is everything should transfer according to expectations, and that's really what you're doing in any estate plan. Keep in mind, some of these are very simple. What we do with our clients is really one of the biggest things is just making sure that your account beneficiaries are set up properly. Again, that applies to everybody, no matter what your estate value is. So because an account beneficiary or what's called a transfer on death certification is all that bypasses a will anyway. But anyway, just so you guys know, we're not going to go into a whole lot of depth right now on the essence of estate planning, but just know that that benefit is available to the United Pilot Group. And it did work out pretty good. We had a lot of moving parts in ours. And here's the one thing I will add to that too. And this is probably the biggest thing I'll recommend out of the process that I learned and that I've seen in some of our clients is that our estate planning office was full up. They did everything for us. And so one of the key things they did that a lot of them, I don't understand, that some of them may not, is they did what's called asset coordination. And so they actually had our life insurance policies. They actually had our,
Mhm.
our title to our house and all that stuff. And they went through the process of retitling all that stuff and funded the trust for us. And so that's a big step is yes, you might have an estate plan in place, but the hurdle is usually how you actually fund the trust with the assets that should be. And then there's one thing, and it did cost more, but one thing I would recommend is if you go through this process, go work with an estate planning attorney that will do what is called asset coordination. They will do asset coordination for you.
Very good.
Yep.
Complicated, but well worth it.
Yep, definitely, definitely. So, yeah, anyway, Alan, back to you. We're going to talk about why we want your tax returns.
Sounds strange, doesn't it?
Yes.
Okay, we do want your tax returns for all UWM clients. Foot Stomper, log into the portal. Do not email us your tax returns. Guess what's on there? Your name, your address, social security number. It's like these RHA phishing emails and text messages. We do not want this information going through the interwebs. So please send us your 2025 tax returns. They should, for the most part, be done now. I know some people have extensions, but we want to see those. What are we looking for? So for a lot of our early retirees, we're doing a lot of lifetime, working on that lifetime tax plan, and that includes a lot of Roth conversions for early retirees because you've just lost all of your United income. We also have, which we talked to some of our younger clients, there's opportunity on the lower of our income scale of the United Pilot Group to still do some Roth conversions of your PRAP account, for example, or if you've got IRAs from your previous regional or from the military, there's some opportunity out there. And I'll share my screen real quick and pull up our kind of our in-house tax numbers document that for some reason I love referring to. But over here, we're looking at the married filing jointly current tax rates. And what you can see is you've got the 10, the 12, the 22, and the 24% brackets. There's a big jump to that 32% bracket. And so somebody making a taxable income of up to 400,000 in the 24% bracket, that's pretty low, when you look historically. And what you got to remember is that's 403,550 is the top of that bracket taxable. You add on the standard deduction alone and you're up at total income of about 435. So above 435 gross income is where you start peaking into that 32% bracket. What we are looking for is our clients whose adjusted gross income is, below that 435 or so. And by the way, our kind of philosophy here is that we don't even want you to think about pre-tax contributions to your PRAP until you cross 450. And yes, you'll pay some tax on the 32% bracket. But again, this is general, okay? There are some people that under no circumstances should pay in the 32% bracket, meaning go ahead and do pre-tax today. Why? Because they may be moving to a no tax state in the future, something like that. Or you might be single and maybe getting married later, and your tax brackets are going to shift downwards potentially. But so, when it comes to contributions, we really encourage people to make those Roth PRAP contributions and really start talking to us about it when they cross over that, say, 450 in gross income. But let's say you're one of these families down here. You're on maybe second or third year pay, and your gross income is well below that 435,000, well, say in the $200,000 to $300,000 range. Then that means there's some room in, say, that 24% tax bracket to take some of those never been taxed dollars, say from United in your PRAP account, and convert those to Roth in that 24% bracket. Now, there's a catch to it. It will be as if you earned it. So you would need to either save up, or the best way to do it maybe is to increase your tax withholding above and beyond what you would normally need to, because we're going to create some more taxable income with these Roth conversions. So take a look at your 2025 return while you're uploading it to the vault. Look at that adjusted gross income and look at your taxable income. The first one's on page 1. The second one, I believe, is on page 2. Look at those two numbers. And if they're below that 430 gross and 400 taxable, let's be in touch. Let's talk about maybe increasing your tax withholding throughout the rest of the year but modeling a Roth conversion at some point this year to get some of those maybe B and C fund dollars from the never been taxed column to the Roth column, but on our terms in that 24% or below bracket. And that'll be great for lifetime tax planning purposes. It's great for estate planning. And the other thing about Roth conversion versus earning, so even if we did convert some dollars into that 32% bracket, for example, when you earn money, especially up in these higher tax brackets, you're not only paying the marginal tax rate, but you're also paying a 2.35% Medicare tax. Well, that Medicare tax doesn't apply to Roth conversion dollars. So even if you do convert a little into that 32% bracket, it is just that 32% marginal bracket, and not that extra tax. So one of the reasons we don't mind paying some of that 32% tax is because down the road, when you start paying Medicare premiums, these premiums really start to add up if your income gets too high in retirement. It means your Medicare premiums will have surcharges. So we're just kind of replicating those surcharges in the future a little bit. The last thing I'll say, when I talked a minute ago about when should I switch from Roth to pre-tax, there's another huge consideration right now is if you're modified adjusted gross income, that's all your income, no deductions, plus tax exempt interest. If it goes above 505 and you're a higher tax state, you start losing out on that new state and local tax deduction. It starts going down from 40,400 towards 10,000 in deduction the higher you go towards 605 in income. So I would say if you're in a higher tax state, this is one general reason why this would be a good time to switch from Roth to pre-tax, is to try and stay above that 505 and adjust to gross income. Again, that is with that standard deduction included. It's all of your income, no deductions, plus tax exempt interest. If you can stay below that 505 by doing pre-tax in your PRAP and you live in a higher tax state, then you can take advantage of up to that whole 40,400 in state and local tax deduction. Otherwise, that creates another huge tax bracket.
Yeah, I think the essence of it too is if you kind of find yourself flying on the edges of some of these ranges, we like to see your tax returns just so we can help you decipher where you need to
Correct.
be. That's the whole point of it. Yeah, there's a lot of information here. There's a lot of ranges, a lot of moving numbers.
Yeah.
But the whole point of it is, hey, let us take a look at it with you.
Yeah. I mean, say you've got somebody that's living in New Jersey or New York right now with a higher tax state, estate tax, and then they're considering moving to, say, Florida or Tennessee or Texas or something like that for the rest of their career, even. Well, we may want to go ahead and do pre-tax for the next year
Right.
or two, and then switch back to Roth when you're in one of those no tax states. So lots of moving parts. So just
Yep.
get us your tax returns. Foot Stomper, do not email those tax returns to us. Please, please, please log into our client portal, go to the vault, share documents, and share those returns with us.
Yep. And the last thing I'll say about getting those tax returns is everybody has access to their tax return as a PDF document.
Yeah.
Okay. And I
Yeah.
say that because I've received tax returns in all kinds of formats that you can't read and that don't do a whole lot of good for
Yeah.
us.
Good
And
point.
so just by the fact that either TurboTax or your CPA, everybody files electronically now. And for
Yeah.
that reason, a PDF is available to everybody.
Yeah. A
And that is
single
the best
PDF of
format.
your
A
entire
single.
return. Yeah. We don't
Yep.
want just the 1040. We want all the
Yep.
schedules. And like Dan said, yeah, thank you. You can get that from TurboTax from your CPA's portal or something like that.
Yep. Absolutely. So anyway, well, cool, Alan. I think that's it. We kind of touched on some good topics today. Definitely be heads up for any fraudulent activity from the RHA text messages or whatever. If it looks funny to you, then obviously just delete it or query it or call the person it came from or something like
Yeah.
that too. So
Phone numbers are the best, right? We know the benefit service center. We know the PRAP service center, right? We know those phone numbers. Any
yep.
doubt at all, give them a call.
Absolutely. So, all right, everybody. Hey, thanks for tuning in. If you guys got any questions for us, anything you want us to talk about in the meantime, whether it be doing videos, podcasts, or whatever, hey, just shoot us an email. Let us know what we can cover for you guys. And until next time, thanks for tuning in. Fly safe.